Strategy has announced a financial move that could reshape its balance sheet. The company has entered into private buyback agreements to repurchase approximately $1.5 billion of its 0% convertible senior notes due in 2029. The expected cash cost is around $1.38 billion, though the final amount remains subject to market conditions. This action was disclosed in a Form 8-K filing on May 14, under Item 8.01, referencing agreements with selected holders of the notes. The company intends to retire the repurchased debt, effectively halving its outstanding balance. The transaction is part of a broader financial strategy that includes a range of potential funding sources, including cash on hand, proceeds from its at-the-market program, and possibly even Bitcoin sales. The final cost of the buyback will depend on the volume-weighted average price of MSTR Class A stock during a specific measurement window, meaning the actual amount paid could vary slightly from the $1.38 billion estimate. This creates a direct link between the company's stock performance and the cost of the buyback, adding a layer of uncertainty to the final outcome. The company's preferred stocks, Strife SDRF, Stretch SDRC, Strike SDRK, and Stride SDRD, are all listed with a par value of 0.001 per share. These are part of the registration statement filed on the Nasdaq Global Select Market. Notably, the filing did not include any Rule 425, Rule 14A12, Rule 14D2B, or Rule 13E4C communications, indicating that the buyback was structured in. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. A way that does not trigger additional regulatory requirements. The company has not yet disclosed the exact source of funds for the buyback, but it has indicated that it could come from cash reserves, stock sale proceeds, or even Bitcoin. This flexibility in funding options suggests a well-planned financial maneuver. The buyback is expected to reduce the company's debt load significantly, which could have a positive impact on its financial stability and investor confidence. However, the use of stock-based pricing introduces a variable that could affect the final cost. The measurement window for the stock price will determine the final payment amount, meaning that fluctuations in MSTR's stock price could lead to variations in the total buyback cost. This introduces an element of market sensitivity that could influence the final outcome. The company's decision to retire the repurchased debt means that the principal amount will be permanently removed from its balance sheet, which could improve its debt-to-equity ratio and overall financial health. This move could also signal a shift in the company's capital structure, potentially leading to a more stable and predictable financial outlook. The use of preferred shares in the registration statement suggests that the company is maintaining a layered equity structure, which could be important for future capital raises or shareholder returns. The fact that the buyback is being funded through a combination of cash and potential stock sales indicates a strategic approach to managing liquidity and capital. The company's ability to use Bitcoin sales as a funding source is particularly noteworthy, as it reflects a growing trend among crypto-native companies to leverage their digital asset holdings for financial flexibility. This could also signal a broader shift in how companies are managing their balance sheets in a crypto-integrated financial environment. The final cost of the buyback will not be known until the measurement window closes, which means that investors will need to monitor MSTR's stock price closely during that period. The company's financial strategy appears to be designed to reduce debt while maintaining flexibility in its capital structure. The use of preferred shares and the inclusion of Bitcoin as a potential funding source suggest a forward-thinking approach to. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. Financial management. The company's decision to retire the repurchased debt also indicates a long-term commitment to reducing its leverage, which could have a positive impact on investor sentiment. The buyback is expected to be completed in the coming months, and the final cost will be determined based on the stock price during the measurement window. This creates a direct link between the company's stock performance and the cost of the buyback, which could influence investor behavior in the short term. The company's financial strategy appears to be designed to reduce debt while maintaining flexibility in its capital structure. The use of preferred shares and the inclusion of Bitcoin as a potential funding source suggest a forward-thinking approach to financial management.